Well, g'day there traders right around the world. It's James here on behalf of Pivot Point Trading. The reason for this video today is I want to address the intermarket relationship between, of course, the price of the US dollar relative to the currencies which it trades against, or in other words, just the dollar index, and how that trades against commodities markets. Most importantly, and most noticeably, the price of crude oil and also gold and silver as we transition further into 2015. Now, going back to August 2014, you can see the price of gold has really broken out from this sideways accumulation type pattern. We've been in a long-term accumulation which has been in the form of a long-term channel. It's been great, or it has been a great basing pattern. We've broken out above 81.61, and since then the price or the appreciation of the US dollar has been absolutely incredible. At the moment we're trading as high, we closed at 91.94, and going back about 5 or so trading sessions ago, or about a week ago, I put out a video addressing the fact that this is going to be a very strong resistance level, about $91.9 cents. Going back 9 or 10 years ago. You can see if I change to the weekly and zoom out and go to, of course, the line chart, you can see that this particular area on the chart at the 91.9 cent level has been a very strong resistance, and it also acted as a very strong support going back to 96 and also 98 and also 2003 and 2004. Now again, we're coming into this level. You can see on Friday's daily candlestick, we've got what we call a perfect bearish engulfing candlestick. Is at this resistance level, and that is exactly what we expect to occur on the dollar index. It's very extended to the upside. It appears as if a long-term bullish trend is breaking out in the price of the US dollar. You can see the exponential moving averages are trending up and supporting price very, very nicely. But having said that, we're at a very strong resistance level. The oscillators which we're looking at are extremely overbought, and we're waiting, or at least expecting, the price of the US dollar relative to, of course, that other basket of currencies which it trades against to pull back down, or at least rest, while of course we let these oscillators reset, come back down into more neutral territory before we can continue the up move in the price of the US dollar. I do believe that the US dollar is going to continue to appreciate for the year 2015. If that is going to be the case, now again, this is purely hypothetical. We need to break above at least Thursdays and Fridays swing high, and of course this resistance level. But if that is the case, you can expect, the price of gold to continue to fall for 2015. As you can see, we rounded out these highs going back to 2011, and as you can see, if we break down the price of gold, we're still making a series of lower highs since July 2011. We're continuing to break down, and there's no reason whatsoever to be buying gold at the moment. We're sort of, or at least transitioning into a short-term sideways pattern, but if the price continues in the US dollar to appreciate, that's going to put downward pressure, or at least selling pressure on the price of gold. Again, gold is largely respected as an alternative currency other than fiat currency. So if the fiat version of currency is rising, i.e. that the appreciation of the US dollar is, as I just said, appreciating, it's going to, of course, take away from the purchasing power of the spot price of gold. Now again, this is the ETF, this is the financial ETF. It's trading at about $117 an ounce as per this ETF. Again, the spot price is 1,172 as at the market close Friday. But if we start to break down below these support levels, going in or coming in at around 112, you can see the base of gold, really, or what could possibly be the base of gold falling out, and we can revisit some old levels going back to 2010. If gold falls as low as $100 an ounce, okay, I'll be investing long term into the price of gold. Anything above 110, I'm letting it sit. So what I'm looking at for the price of gold into 2015 is to see this level break at 112. I want to see what happens if this level does break, if this intra-week swing low going back to late 2014 breaks, and then I want to see the price of gold come back down to these old historical lows going back to 2008. You can see it acted as resistance, 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 resistance. I'll analyze the price of the US dollar, but it'd be a very smart move to at least be dipping your foot in the water, okay, when it comes to a long-term position in the price of gold. And again, the GLD ETF is a fantastic opportunity, or it's a great opportunity to allow investors to hold not so much the physical ownership of gold, but at least have a purchasing price at which you technically own gold at. Now, again, having a look at the SLV ETF, this is pretty much the counterpart of the gold ETF. You can see that we're trading down at levels really which we haven't revisited since 2009, 2010. At the moment, as at the close on Friday, we're here at $15.77 for the price of silver. This is quite incredible because if we go back, and I'm just changing to the weekly again, we haven't revisited these old prices. I need to actually go back and draw some more support levels on this chart for it to make sense. Now, when we're looking at the price of silver, it doesn't really have the same effect as gold in the way of a fiat currency or an alternative to a fiat currency. That largely falls on the shoulders of gold. But having said that, silver also is very speculative for traders and also investors. It doesn't really have the same backing or support as gold, but there's definitely the argument in the way of manufacturing, whereas silver definitely has some form of identity and just an underlying demand for this type of metal, of this precious metal. When it comes to a long-term buy and hold strategy for silver, you're really working with the price action going back to 2007 and 2010. This perspective box right here, this price action which has taken place in this box for the better part of 3 years, is really what we'll be focusing on moving forward. But as a template, it doesn't really work as well as the template of GLD and of course the price of the US dollar index. What I'd like to see most importantly is to track the movements of the US dollar. As the US dollar again appreciates in value, you can expect downward and selling pressure or depreciation in the price of GLD and SLV to continue. So as we have a look at these markets, as we have a look at these precious metals markets, there's no reason to be jumping into long-term buy and hold positions on GLD at the moment. Again, there's no reason to be moving or at least buying long. We haven't set up a higher high yet. We're still making a series of lower highs. The bearish trend is still continuing. We're still below the 100 and the 200 simple moving average. There's no technical reason other than a little bit of bullish divergence, which hasn't confirmed yet, to start getting carried away on the long-term appreciation in the price of the precious metals markets. To conclude with, the same is true with the spot price of the crude oil. Again, expect that to be, or the price of crude oil to deflate or depreciate relative to the price of the US dollar. As the US dollar appreciates in value, consumers are able to purchase more gas dollar for dollar as what they could if the price of the US dollar was less. So please keep an eye on the price of the ticker symbol WTI of the crude oil. Again, it's going to work inversely to the price of the US dollar. I do believe the US dollar is going to slow, albeit short term, before we continue on in the appreciation of price into 2015. Again, that is largely responsible, or at least there's a big bearing on that relative to what the Federal Reserve is going to do. And again, we're expecting a meeting in the next month or so, which is going to dictate, of course, interest rates and what is going to occur. There's a lot of talk whether interest rates are going to increase for the first time since the GFC, or if in fact they're going to stay where they are at the moment. If in fact interest rates rise, look for, of course, an ascension or at least a continuation in the price of the US dollar. All right, ladies and gentlemen, thank you so much for listening to this video. Have a great weekend. Have a great Sunday. I'll see you all as at Monday afternoon for continued market recaps of what the 3 US markets are doing. All the best. Goodbye.